Margaret. Hi, everyone. On behalf of DAM Capital Advisors, it gives me a great pleasure to host CMS Info Systems on their maiden quarterly analyst call today. From the management side, we have with us Mr. Rajiv Kaul, Executive Vice Chairman, Whole-Time Director and CEO, Mr. Pankaj Khandelwal, President and CFO, Mr. Anush Raghavan, President Cash Management, and Mr. Manjunath Rao, President Managed Services. Before we begin, a quick disclaimer that some of the statements made in the call could be forward-looking in nature and should not be taken as a guarantee of future performance, as there are risks involved here which are difficult to predict. I now hand the call to Mr. Rajiv Kaul for his opening remarks.
Good afternoon, everyone. Welcome to our first call post-listing. Thank you all for your support as well as your investment in our company. I guess some of you are going to be listening to us and interacting with us for the first time, and therefore I will start with a brief background about the company, which may be a repeat for some others of you. We are India's leading B2B outsourcing services company, focusing on the BFSI sector. We have three broad classes of businesses. Our largest business is our cash management business, where we have built an extensive logistics platform across the country, and we are helping banks reach the last mile with the high-quality services around cash management. We are a market leader in the sector, and we are present across the entire cash cycle. The nature of revenue in this business is mostly annuity. It's linked to routes and density, and therefore offers a strong operating leverage as you grow in scale. Our second largest business is around the managed services segment, which is predominantly around the ATM network. We started this business about 5 years ago, and we are one of the fastest growing companies in the sector. The revenue in this is a mix of, it has a variety of revenue sources, starting from product automation sales, maintenance services, managed services for the ATM network, multi-vendor software, and ground level ATM deployment services. The revenue profile in this business is largely, again, long-term annuity, but more recurring in nature, where contracts are signed for 5 to 7 years, and therefore it gives you a fairly predictable and a stable revenue profile. Our third type of business is tech solutions, which we incubated during COVID, and we have launched AI-based remote monitoring solution for banks so that they can digitally monitor their bank branches and ATM sites for better security and to help reduce their costs. In a very short period of time, we are emerging to be a clear leader in this sector and have a very good order book. These three types of businesses, which we all offer in-house, make us a fairly unique platform which offers end-to-end integrated services to banks. Before we dive into the current performance, I do want to establish the historical trend. In the year before COVID, our revenue had grown by 20%. Our PAT CAGR from FY19 to FY21 has been 32%. Our margin and return profiles are in line with some of the best outsourcing, especially IT outsourcing companies you may be tracking. If you compare us to business outsourcing companies, business services outsourcing companies in India, our margin profiles are dramatically much higher and different than compared to most of them. Specifically coming to fiscal year 22, the cash in circulation continues to grow at a very robust pace. It's almost touched 30 lakh crores currency in circulation as of December 2021. The currency handled by CMS in our ATM and retail network has grown by 18% year on year, from 2.37 lakh crores to 2.8 lakh crores in Q3 FY22, which sort of indicates and underlines the robustness of the usage of cash, as well as links to the broader recovery in both economic activity and consumption in the country. In the ATM space, we are seeing a very strong ATM RFP pipeline led by the public sector banks. Almost 30,000 ATMs we anticipate will come up for procurement in the next 12 months, which is both going to be for a refresh as well as expansion of the network. For us, one of our key focus area has been employee health and safety. We are relieved that we've been able to contain the impact of the third wave, despite the fact that a large part of our workforce, which is almost 23,000 strong, is on the ground, on the road in potentially high exposure roles. Therefore, there is a relentless focus on their safety. We have managed to touch almost a 90% second vaccination of our employee base. As a private company itself, we held ourselves to a very high aspiration in terms of governance, but I'm pleased to inform you that right after we listed on December 31st, we have expanded our board and added 2 more independent directors. We have the pleasure of having Ms. Manju Agarwal, who has retired as the ex-DMD of SBI a few years ago, has more than 34 years of banking experience and strong operational experience across both the ATM channel and the digital channel. She has joined our board. In addition, we have Ms. Sayali Karanjikar, who was the co-founder of PaySense before it was sold to PayU, and she was in PayU as the Chief Business Officer of PayU Credit India. Both these esteemed board members have joined our board effective January 1, 2022. Mr. Tapan Ray and Ms. Shamila Gopinath continue as and Chris Jamrose continue as other directors on our board, and we also have board members from Baring Asia who are our promoters and largest shareholders. Coming to our business, we are seeing very strong growth across all our verticals. There is an ongoing consolidation in the cash management sector, and that is helping us not only grow in volume but also in market share. Our market share, and specifically in the ATM cash management, is grown from 41% to almost 44% in the last 6 to 9 months. In the managed services sector, our focus has been on execution. As some of you know, we had won a significant order book of almost 2,000 crores, and I'm happy to announce that a large part of the order book, which is the State Bank of India brown label ATM deployment for 3,000 machines, is fully executed and is running fairly stable and demonstrating very robust transaction trends. We have also completed in the remote monitoring sector a soft integration of our acquisition of Hemant Technologies, and we are right now undergoing closing procedures with them. To talk about our overall financials for the quarter and also for the 9 months ending December 2022, I would like to invite our CFO, Pankaj, to share more details.
Thank you, Rajiv. Good afternoon, everybody, and welcome to this earnings call. We had strong growth on all financial parameters, both on year-on-year basis and on quarter-on-quarter basis. The revenue from operations grew by around 9% on quarter-on-quarter basis and around 21% on year-on-year basis to around 403 crore rupees. The adjusted EBITDA was also reported at 108 crore, which grew by around 43% year-on-year and around 13% on quarter-on-quarter, with an adjusted EBITDA margin of 26.83%. The net profit reported was around 60 crore, which grew by 48% year-on-year and 14% on quarter-on-quarter, with PAT margin of 14.9%. For 9 months ended, the revenue from operation stood at around 1,145 crore, which grew by around 28% year-on-year, with the adjusted EBITDA growing by around 39% year-on-year to 289 crore, and margin of 25.22%. The net profit stood at 160 crore, signifying a growth of 42% year-on-year, and PAT margin stood at 13.97%. The details of BU-wise financial will be covered by Anush, our cash management head, and Manjunath, our managed services head, subsequently. Now I would like to call upon Anush, who is our business head for the cash BU, to talk about our cash management business in detail.
Thank you, Pankaj. Good afternoon to everybody. I would like to brief you about our cash management segment. As Rajiv mentioned, we are the market leaders in this segment. During this quarter, India continued to witness a healthy growth in currency in circulation, with the total currency handled touching 30 trillion rupees. CMS witnessed a robust growth in currency handled in the third quarter FY22 to 2.8 trillion, which signifies a year-on-year growth of 18% and a quarter-on-quarter growth of 9%. Our overall cash management network grew to 112,000 points, which includes ATMs and retail touchpoints, as we continue to expand our network across the country. We witnessed volume and market share growth across all verticals, led by a strong economic recovery and market consolidation. We continue to drive automation across various operational processes using technology, and this has helped us maintain and grow our margins. I'm also happy to announce that we have received the ISO 27001 certification for the cash management business. For the third quarter, we achieved a 19% year-on-year growth in operating revenues to 292 crores and an EBIT growth of 23% year-on-year to 71 crores. For the 9 months ended, we achieved a 22% year-on-year growth in revenues to 812 crores and EBIT grew by 27% to 189 crores. I would like to now hand over to Manju to talk about the managed services and the tech solutions business.
Thanks, Anush, and good afternoon, everyone. As Rajiv mentioned earlier, the focus for managed services business for this year has been on execution of the order book, which we had won over last 12 to 18 months. Total ATM network under managed services grew 1.4 times year-on-year to 11,000 as of December 31st, 2021. In tech solutions business, we are seeing strong traction in recently started AI-based remote monitoring solution with an order book of 20,000 plus sites as of December 31st, 2021. We also have an order book of 7,000 plus ATMs for our proprietary ATM security software, CMS Algo, as of December 31st, 2021. Our financial performance in this segment have been very strong with significant growth on both revenue and EBITDA. Revenue for Q3 grew at almost 51% to 113 crores and for 9 months ending grew to 67% to 337 crores. EBIT for the segment for Q3 was INR 21 crores, which is a growth of 127%, and for 9 months FY22 was INR 55 crores, which is 81% growth. Margin percentage for the segment also expanded considerably from 12.5% in Q3 FY21 to 18.6% in Q3 FY22. In conclusion, we are all very excited about the journey ahead with a new chapter as a recently listed company and also with significant addressable market opportunity ahead of us, giving growth levers to all our business segments. With this, we can now open the floor for question and answer session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, please press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Devansh Nigotia from SIMPL. Please go ahead.
Yeah, sir. Thanks for the opportunity and congratulations on great set of numbers. So just a couple of questions. One is in case of, can you give us the number of ATM points and the number of business points for last 3 quarters and last 3 years so that we can see the revenue trend per business point, how it is shaping up?
So I think the number which we can share with you today is that and I'm assuming you're talking to the ATM points on a cash management network.
Yes.
Our overall cash management network, which is a combination of number of ATM points and retail points, that has grown to 112,000 points at the end of December 22. This is a 15% growth over the corresponding December 2021 number.
Okay.
Sorry, 2021 versus 20.
Okay, 21 versus 20. Okay, so that's okay. And if we compare it against the cash management number, that has grown by 19%.
Our revenue in the cash management business over the 9-month period is at about 18 to 90% revenue growth.
Okay. So bulk of the market share gains is in
the market share gain number which you referred to is in the ATM side.
Thank you. We lost this line, so we'll move to the next question, which is from the line of Sanjay Ladha from Perfect Research. Please go ahead.
Hello. Is my voice audible?
Yes.
Yeah, you're audible, sir, but I would request you to come on the handset mode if you are on speaker.
No. Congratulations on a good set of numbers, sir. I just have a couple of questions. That is, over a period of 2-3 years, how you see your revenue mix change, like managed service and cash managed service as a percentage of revenue? And if you can share growth guidance for each of the business and sustainable margin profile for the same.
Sure. So when we think of our business, we think of this in terms of creating an integrated solution for a bank. We feel over time many banks will move from piecemeal procurement to integrated contracts, and I think we've seen that trend already play out. At the end of FY21, we had looked at our 4-year targets and 4-year growth aspiration, and we think that we aspire to be a 2,500 to 2,700 crore revenue business by FY25. Specifically to your question of the mix of businesses, we have our managed services business obviously started from a smaller base, and now, as you can witness, is growing rapidly on a smaller base. The mix of the businesses was maybe 80-20 a couple of years ago, is closer to 70-30 today. I think just given the type of business and the market opportunity, because the managed services sector is a pretty large sector out there, we think this potentially could be a 65-35% split, assuming both the businesses continue to grow strongly.
And sir, on the margin front?
I think the margin profile, as we've indicated right now, we saw FY21 very substantial improvement in our cash management business margins. In FY22 9 months, we've seen a substantial increase in our services EBITDA margin profile. I think both of them are almost close to each other right now on the margin profile of the businesses, and we hope that will sustain and improve steadily as we grow in revenue.
Okay. And so my next question will be, in the managed business, how much percentage of revenue is recurring in nature? And one last question will be, what are the challenges you see due to the online transaction, and how are preparing ourselves for the same? Thank you.
So the majority of our managed services business is recurring in nature. It may vary year to year depending on how much one-time business we win, but I think 80% of the revenue you can consider as a recurring in nature, and the remaining 20% of the managed services business is potentially what we would do by selling of a automation solution, which then in turn leads to maintenance revenues coming in, which are recurring in nature. So your second question was around the digital thing. I think on digital, which is a fairly broader question, we've seen a whole trend post demonetization where UPI picked up significantly, and we've seen again during COVID a lot of digital payments growing rapidly. Our point of view is that as India grows, there are many parts of India, and we'll see both growth in currency as well as digital, which is already witnessed in the statistics you see. Currency in circulation is up by 17-18%. And we are almost like a 30 lakh.
Members of the management, we lost the audio from your side, sir. Members of the management, we cannot hear you. Please confirm. Ladies and gentlemen, we would request you to stay connected while we check the line for the management. Thank you. Ladies and gentlemen, thank you for patiently waiting. We have the management reconnected. Over to you, sir.
Yeah, so I think on the question on digital, I'll repeat myself. We've seen a trend line to digital through UPI in 2017-18, and even during COVID, we've seen a growth. Our perspective is that as India grows, there will be significant growth in both digital payments as well as physical currency. Physical currency, as you see, has already grown by 18% year on year. And I think that gives us a fairly robust opportunity out there for our business to grow. What are we doing specifically to protect against this? I think we feel there is a significant business in the banks which will get outsourced, which is done in-house with the banks, which is already the base number today, which we don't get to work on. I think that gives us a 5 to 10 year opportunity for very high growth. We see retail sector as a large sector, which will, as it moves to organized retail from semi-organized retail, I think that will become a good area for growth for us. And our approach is that when we think of digital, we think tech, and we look at the whole technology which goes behind the cash cycle. And our attempt is to get into that through our managed services vertical and also from our remote monitoring vertical.
Thank you, sir.
Thank you. The next question is from the line of Achal Lohade from JM Financial. Please go ahead. Achal Lohade from JM Financial, your line has been unmuted. Please go ahead with your question.
Yeah, sorry about that. Good morning. Thank you for the opportunity. My question was if you could talk about the ATM touch points as of 30th September. You talked about 31st December, so just wanted to see the touch points QOQ. If you could split between ATM and retail.
Achal, I'll have my colleague Anush help you through with this.
Sure.
Hi Achal, good afternoon, Anush here. Give me one moment while we add the figures. I think as of Q2 ending, our total number of touch points across ATM and retail was about 104 to 105,000.
Would you guys be splitting it in terms of the number of ATMs and the retail on a quarterly basis?
I think Achal, fundamentally we look at the cash business as a route logistics business, which has a certain platform effect. And for us, which is why we try to measure this in terms of our business points. So we would like to report a consolidated number of ATM and retail touch points.
Understood. My second question was in terms of the compliance. If you could talk a little bit about that aspect in terms of for the industry and for CMS, what these compliances are, and how does it impact the financials for us?
Sure. I think our whole efforts to drive compliance across is progressing very well. You would also see that in addition to the capital spends that we had incurred in FY 2021, we continue to invest in upgrading our infrastructure across the cash business. We are currently compliant for about 30% of our overall ATM network, which we think by end of March should increase to about 40-45%. There is a strong push on part of the banks driven by the central bank requirement for them to complete this as soon as possible. Basis this, we are also seeing a significant increase in the momentum and pipeline of RFPs which are being allotted by banks. So that's as far as the compliance is concerned. With respect to the industry, we would prefer not to comment about that right now.
And when you say 30% for our ATM network, I presume you're talking about the route compliance. What about the cassette swaps?
The cassette swap, I think, Achal, would be a better time to talk would be post the year end. And there are many banks which are piloting this on their network today. Some banks have started deploying it. I think end of the year would be a better and appropriate time to look at it and take stock of it.
Understood. And you talked about in an answer just before my question, you talked about certain activities which our banks are doing in-house, increasingly we are looking at those opportunities. So just wanted to get some more color, if you could talk a little bit on that front.
Sure. I think when you think from a 5 to 10 year perspective, right, there are different opportunities for growth. One part of the growth comes in when the base increases, right? The base is of the activity a bank does, the number of touch points they set up, the number of branches they have, the number of ATMs, the number of retail points which get outsourced. The second is the fact that the banks still do a large part of the work in-house, and that over time is going to increase in outsourcing, which presents ourselves as a strong growth opportunity. Today, almost 1/3 of the ATM network is done in-house with the banks, and we think this will reduce over time given the cost and the compliance levels. It will become difficult and expensive to banks to do it in-house. It will be far more cheaper for them to outsource this to larger players who can do this for them more effectively and at a cheaper cost. So I think that's the opportunity which I talked about when it comes to cash management. There is an overall base of cash usage which is growing in the country still. And then there's a large part of the value chain which is still done in-house by banks, especially public sector banks, cooperative banks, rural banks. And we think that over the next decade will present a very significant opportunity for outsourcing.
Understood. Any growth guidance we would kind of talk about over the medium term in terms of both the segments?
I think as a company, which I stated in my opening remarks, as a company, we are looking at we are looking at a revenue range of 25 to 2,700 crores by FY25 levels.
And the margin?
I mean, we are a network business, right? Margins should systematically expand as we have seen in the preceding years. And therefore, to maintain, we feel confident that we should be able to maintain our current margin levels and hopefully improve steadily from here.
Thank you. I would request Mr. Lahade to rejoin the queue for follow-up questions. The next question is from the line of Nirmal Bari from Samiksha Capital. Please go ahead.
Yes, sir. Thanks for the opportunity. My first question is on the order book that we have at present. So how much of the brown label ATMs order book outstanding is to be executed in the next few months?
So at the end of Q3, we had finished the brown label order from SBI that is successfully executed. We have another public sector bank brown label opportunity which we are in the midst of executing, and we will complete that by the end of Q4. So the SBI contract was for roughly 3,000 ATMs, and this other public sector bank is roughly 900 ATMs, which we'll complete by Q4.
Okay. And then what the CapEx for current year, considering this almost entire execution would happen in the current year? So if you can guide for this and the same for next year, if there's any estimate.
So apart from this BLA ATMs, the order book also contains large AI-based remote monitoring deployment of around 20,000 sites and a lot of software-related orders, which we are in the process of implementing. The BLA ATMs, what we deploy, the revenue will occur over a period of 7 years. And right now, the orders we have executed, the BLA sites which we have executed so far, have 1 to 7 months for this 9 months ended.
No, I was talking about the capital expenditure for the current year.
I think, we won't be sort of comfortable sharing that data as of now. I think what we've seen